Hey traders, welcome back to another workshop. Because we don't have any sort of setups today, so let's talk about an important workshop, which is what are some of the market condition, some of the price action where you should never go against a trend. So because we have a lot of workshops, we have workshops on rollover, we have workshops on talking about flags or buster flag, we have workshops talking about different types of reversal pattern, mean reversion pattern, but this is actually the first time we talk about under what kind of condition you shouldn't go against a trend, or on the other hand you shouldn't think about trading any sort of reversal. The first one is a parabolic trend. I know every time when price spike up in one candle, so for some of you may not know what is a parabolic trend. A parabolic trend technically means a trend where it goes into a straight line. So we have different types of trend. We have parabolic trend, we have strong trend, we have a healthy trend, we have unhealthy trend. Unhealthy trend are things like it keeps grinding into one direction, just like this one, for example. It grind, just don't have a clear direction. So parabolic trend, we can refer it to something like this as well, where prices drops in a straight line and it provides no sign of pullback. So that is the kind of market condition where I normally don't try to catch the reversal, but rather I try to participate on the pullback. So there are different types of reversal trader. The first type are traders who already have a proper plan. They already plan beforehand about, oh, I want to go against it if price do XYZ, which means those are traders who are well prepared. Second type of traders are traders who just blindly go against the trend because they feel like, it's impossible. It's impossible that this thing will go 500 pips. It's impossible that this thing will go 1,000 pips. Trust me, this impossible type of mindset will eventually damage your edge in the long term, because there is no such thing as impossible in the market. Just like pound dollar, right? Like this right now. Price just keeps going down. Is there anything such as impossible? Dollar yen, same thing as well. Look at the way dollar yen goes up. Is there such thing as impossible? If you were to keep blindly shorting into dollar yen, why did we step away from dollar yen? If you look at all of my trade calls, when I go to dollar yen, I immediately say, no, we're not trading this pair. Why? It's because market has obviously shifted into a very strong uptrend. You might argue that, and why don't you go long if you know it's going up? It doesn't fit into my trading style. That's it. Okay, so go back to GU, go back to different points. The first one is a parabolic trend. Try not to catch a falling knife. So if let's say today you say price does this, all of a sudden it just shoot up within one candle. When price does this, right, if you think about it logically, what happened to the retail trades? There are different types of trader. First one is they jump onto the buy, and those are what we call traders who are getting slaughtered by the market. Why? Because they are getting in because of the market panic, because they panic, they greed, they fear, or whatsoever emotional reason, they jump onto the market without knowing what the market is actually doing. They start jumping into buy because it's going up. That's what we call the dumb retail trader. Okay, so second type of trader are those who say, I want to go against it. So there you can imagine the key reason why price goes up is because in between the spike there are a lot of liquidity getting swept off. There are a lot of people who actually go against it and to say, I don't think this will go up, or there are a lot of people placing stops above, and that sort of triggers that snowball effect that price pump up as well. So I want all of you to, from now on, engineer your mindset to say, if price spikes up, we know that the direction is up, right? We know that the direction is going up. Then what shall we do? We wait for pullback to go long. That's it. The same thing goes to a downtrend. If you see price does this, suddenly just one candle smash for 100 pips, you don't have to chase the reversal. You don't have to try to catch every single thing. You don't have to chase the sell here as well. You can actually wait for pullback to see, are we pulling back deep, or I call it pulling back shallow, then you join the sell. It's much better to say I want to participate onto the breakout momentum and I wait for pullback. Alright, so that's our first condition. Don't try to go against such a parabolic trend unless like what I say, you have price. Let's say we have a support here. Before that we have another major support, then price just all of a sudden spike down. Then you say, oh, my goal is to say I want to get in at the major support with a limit order. Then of course you can do it. Under this kind of condition you can do it. Why? Because you have a proper planning process. But to say, oh, price broke, I just want to chase the sell up, doesn't make sense. Alright, so let's go to our second point. So our second point is actually a little to no pullback trend. So that's what we refer to a grinding trend, and that was also one of the examples that we set in the group yesterday. I think there were two members talking about they want to potentially go short. There's no right, they want to potentially go long. There's no right or wrong with the thought process. I want all of you to remember the key thing I point out this example isn't because I feel like these two particular traders were doing something wrong. As long as your thought process was there, as long as you prepared for the scenario, you can do it. You can still go long. But based on my experience, I will tell you, when you start seeing price doing this, right? Grind. If you switch on the EMA, you can see that price is just grinding under the 20 EMA, which means we are in an extremely strong trend. You try not to go against it. Don't go against it until you see evidence of price doing this. For example, so we have a structure here, right? Can you all see this? On 30-minute, we got this support. We also got this major support, right? Because these were the two obvious structural shift areas. So price broke under 122.37, continue. Broke under 121.97, it continued to drop. See that? Okay. Unless you say this, we have a high here. So we have a prior high right here. Prior high. Then you can start setting criteria like I want to see price start going up, forming signs of failure, defending some of these minor structure, break through some of these prior high. Then you try to participate when you see price slows down. That makes a lot more sense. All right, instead of saying, oh, price formed a period of slowdown, because the thought process behind these two family members, they want to go long, was because of the lower time frame. They say that, hey, we have a period of accumulation. But if I really were to put on a replay mode, does it feel more like an accumulation or does it feel more like a distribution? It feels more like a distribution, right? Why? Because we're pressing into the seller's direction. Alright, so all of you to remember this second scenario. Don't ever try to go short into market condition where we have little to no pullback. That was exactly what happened to pound yen. I think it was a month ago as well, on this condition. Alright, on the entire June, July, I think June and July, and even up until August, right? We just keep pushing high. See that? Especially from June. Early June to late June, we just keep pushing higher and higher and higher. If you were to chase this and to say, oh, is that a distribution? Is it a double top? Is that another rollover? Is this a pin bar rejection? If you were to chase all these falling wedge, rising wedge, whatever, how many attempts do you have to lose before you start saying that, oh, maybe I just don't fit into the current condition? Because you don't have to take everything. I always say this, sometimes when the market condition doesn't align with your setups, with your edge or whatever, you can step away. You don't need to participate on everything. You don't need to say, oh, price goes up, I want to find a way to capitalize on it. You don't. Third point, no signs of structural shift. That was similar to the point that I just mentioned. If you want to get into a reversal trade, right, especially let's say when price is doing this, you can use, so normally I'll set a criteria to say, if let's say we got 1, 2 minor prior low, right, I want to see price break through 2 prior lows, then I'll start looking for signs of a slowdown to go short. Even if I were to go short, I will also target some of these minor structure. Why? Because price is in an extreme trend. Same goes to GU. If let's say today price really does this, okay, assuming we put on a replay mode, price really does this, you can start setting criteria to say, hey, breaking above one of these minor structure wasn't enough for me. Why? Because price can always come up then reverse all the way back down. So you can instead say that I want to see price defend a minor structure, I want to see price showing more signs of strength, then from there I can start looking for pullback entry with some of these high as my target. Alright, you want to see clear structural shift with 1 to 2 to 3 high low confirmed, only you start looking for mean reversion trade. Even if you were to go long and it succeed, you still need to target some of these minor structure. Why? Because we have to respect that the market is temporarily in a strong sellers market. Alright, when sellers are strong, when the intention is strong, wouldn't go against the intention. You either join the sell, you either don't take anything. Right, that's what I'm doing as well. I'm not trading any of these dollar pairs, I'm just waiting. Alright, so this week I only took like one break even and one loss yesterday. That's it, no trade. Right, fourth point, don't ever go against a strong trend, or don't try to trade reversal when you've lost more than 2 to 3 attempts. So why is it so important to set these sort of a drawdown, max drawdown limit criteria? Is it pulls yourself away from the amount of bias, from the amount of stubbornness you have. Because as a trader, we love catching reversal. Why? Is because it's exciting. The feeling of catching tops, catching bottoms, catching that beautiful reversal at the tip, at the peak, it makes us excited. That's a normal human being. That's normal human nature. But our job as a trader is to conquer that aspect and say there are times where we have to follow a trend. There are times where we have to just go reversal. Similar thing happens to pound yen. If you look at pound yen right now, why did I say in our trade calls to say that you can potentially look to go short at 180, 130, although price is still there, but because I identified that this is that kind of market condition where I feel like we're just going to continue pushing lower. So either go short at 180, 128 or go short at 180, 151. Did I say, oh, go buy this, aim for some bullish reversal scenario? No. Same goes to, you see, Euro Aussie. See that? When market has shown clear lower highs, lower high, lower lows, sorry, lower high equal lows, we want to participate on the sell and we want to get into some of these minor highs. Same goes to pound Aussie. Why did I talk about going short on pound Aussie? Why did I not talk about going long? It's because right now the major flow is flowing down. There are times where I talk about long. There are times where I talk about following the direction as well. It seems like price is rejecting as well. Right? On all of it to remember one thing, flexibility is the key. There are times where you have to just admit or acknowledge the fact that I'm wrong. Once you lose 2 attempts on reversal, usually I'll just step back and say, hey, I'm done. If I continue to trade this, yes, maybe the 3rd attempt is going to be a winner. Maybe if I continue to go long onto this GU downtrend, I'm going to succeed. Maybe I'll get a 1 to 5, 1 to 10. But ask yourself, how much mental capital are you going to drain out of catching bottoms like this? If you keep catching it, get stopped out, catching it, get stopped out. What if these things eventually dropped all the way down into 119.76? You could have been going short, and it could have been one of the easiest short you ever get as well. Low high, low high, low high, low high. Wherever you get in, you will never get stopped out. Alright, that's why I say if this kind of grinding trend doesn't fit into your trading style, just don't participate. If it fits, make sure you don't go against it, you go short, you follow the trend. Alright, same thing, if price keeps grinding up, don't just keep blindly going short. You need confirmation, you need structural shift, you need a lot of confluences to say, hey, right now sellers are stepping in, I want to go trade against the trend. All right, and the last one is, it is generally very difficult to go against the trend or trade reversal when you have 0 reference point, just like pound dollar right now. If we go to the daily, do we have any sort of reference point? No. Price is out of nowhere means what? there might be more sellers stepping in, taking advantage of this. When there is no major support level underneath, what do you think will happen? Very likely is sellers will continue to take advantage of this weakness, attracting more sellers into the market, send price lower, then buybacks into the market. That's how market works as well. That's how supply and demand works. When everyone's so bearish, it will eventually hit the next key level, attracting everyone onto the sell. Then the big sharks, the big buyers step in and say, I want to sweep all of these sellers away. Supply and demand. All right, so 5 points here. First thing, don't short into a parabolic trend. You can, but I'll much rather for you to wait for pullback to participate onto the breakout direction. Second thing, little to no pullback trend. When price just like pound all around, if it keep grinding lower and lower and lower and lower, don't bother going against it. Third thing, no signs of structure shift. When you're looking to go against a trend, let's say if it's dropping down very aggressively, you need to see at least 2 to 3 confirmations of price creating high lows or lower highs, whatever, depending on bullish reversal or bearish reversal. You will ideally want to see that happen before you start jumping onto the reversal trade. Fourth point, don't ever keep blindly going against the trend. Limit yourself to a certain amount, a certain retake, certain re-entries to say, oh, maybe I will not go back in if I lost 2 trades. I'll not go back in if I lost 3 trades or whatever. You need to start having that kind of criteria. Fifth point, if you have 0 reference point, don't go against it. All right. One of the most dangerous things to do is to say, oh, market drops, it's impossible, it's overextended, I want to go against it. No, that's not valid. That's not a proper setup. That's not an edge. All right. You always need to say, oh, I have a reference point. Market is reacting a daily support or 4-hour support or 1-hour support. Then from there, I can start framing a nice entry. All right. So that's it for the workshop. And if you like the video, please don't forget to like, share, and subscribe. And I hope to see you all in the next video. And trade safe as usual. Keep learning, keep growing. And if you're interested to join our community, link in the description. I'll talk to you later.